Hello and welcome. This is Sergio Marrero, and we are here at RBL1 Live with Nasir Qadree. He is the managing partner of Zeal Capital Partners. So we'll talk more about Zeal Capital Partners. I've known him for a long time, and we met even while he was at Village Capital, leading up economic opportunity there, and he also led social investments at AT&T. So honored for you to join us today, Nasir.
Sergio, it's great to see you and thank you so much for the invitation. Big fan of you and your work, and this is such an important platform to highlight diverse entrepreneurs and diverse fund managers, quite frankly, that we don't get a chance to highlight the most. And so thank you so much. It's an honor, and I'm looking forward to this conversation.
No, thank you for being here. We need to get more, what is it, investors hiring and wiring, and also LPs. So hopefully this helps all of us out. So that's good. Diving right in though, and not to take away from Zeal Capital Partners that you're managing partner at. Can you share with the audience a little bit more about Zeal Capital Partners?
Yeah, sure. Zeal Capital Partners, it started about a year ago. Two of my biggest mentors, we had dinner, and they were pushing my thinking. They said, Nasir, you talk a lot about, John F. Kennedy's moonshot idea, really, in this case, rethinking how we think about deploying capital to entrepreneurs, democratizing entrepreneurship, democratizing venture capital. And so you've developed a pretty strong track record. You've a deep community, both in entrepreneurial, investor community, and other stakeholders across the country, and of course, domain expertise across verticals like education and financial services and health, and with a lens towards impact, but thinking about financial return first and foremost. Why don't you start your own fund? And so I gave it a lot of thought, like a lot of us, especially when you're an African American or a founder of color or a woman-led entrepreneur. You feel like you have the sense of imposter syndrome, and you feel like you have to check every box. Whether, unfortunately, when you're maybe a white male, you actually you can check two boxes and feel just fine. And I think I felt that, and it took me some time to really get power through. But I respect these business leaders a great deal, and couple them with a number of other mentors. After temperature checking the idea of Zeal, I felt very comfortable that now was the right time. This is pre-COVID, again, a year ago, almost today. And so the fast forward, we're headquartered here in Washington, D.C., where I live. I've been here for about five and a half, going on 6 years now. And we're an early stage venture capital fund. We coin ourselves as an inclusive investment vehicle, focusing on partnering with diverse management teams that are focusing on bridging our country's wealth and skills gap that we believe turbocharges economic mobility across the country. And we do this through two sectors, financial technology and in the future of work, which we can get into shortly. But that's the crux of Zeal, and just really excited to be in the market and partner with the best entrepreneurs who are solving problems within these two verticals.
That's great. Can you give the audience, before we dive into your story, which I look forward to hearing more about, what types of startups are you focusing on, and what size investments, and what stage, just to give so the entrepreneurs know as they're reaching out to Zeal?
Yeah, great question. It's so for us, we are a pre-seed to Series A. We'll over-index, just given how we think about portfolio construction between seed plus and Series A. We are focusing on two sectors, as I mentioned, future of work and fintech. When I think about the fintech space, we anywhere from credit access expansion, financial management companies, companies that are thinking about resources for small and new businesses. In the future of work, we're starting companies that are selling into post-secondary and beyond. So that's alternative to education pathways. That's financial affordability, access to help students and even workers pay for nano degrees and credentials, thinking about um, new forms of training and skill development platforms. 40 million workers today are unemployed or furloughed. A lot of them are at home, really thinking thoughtfully about how do they reinvent themselves and back into the marketplace as they look to remain competitive in the workforce. So there's a number of innovations happening within these two verticals, and we're seeing the adoption rate actually has increased with valuations fairly low. Again, being a pre-COVID, none of us would have forecasted this environment, but the upside is that there's a great deal of innovation happening within these two verticals because of the health pandemic, and so that actually has yielded us to share that there's an opportunity to deploy capital into these early stage companies. So that's the crux. The other, what I would say, is the check size. So we would write anywhere between 250 to a $3 million check. Our sweet spot is $1 million. We'll invest 20 to 24 companies in Fund One, and which yields about 5 to 6 companies per year. We will lead deals. We're not afraid to lead deals. We won't lead all deals because we do want to make sure we have enough bandwidth to lean in with the companies and add value post investment value creation within our portfolio companies. And so when we lead, we do take a board seat, or a board observer is also an option. And yeah, we feel like we play strongly. We play a very clear place in the market, especially as we think about our value add within our inclusive investing strategies, which I'll get to shortly.
Great. No, I appreciate you sharing a little bit more of that. Can you share how did you end up starting your own fund, starting out at earlier in your career, for those that don't know, at Goldman Sachs and State Street, more focused on finance, and then shifting into the this inclusive investing space? How did you become a VC?
Yeah, so I like taking it way back. I think we're at a point in time where venture capital and the career in venture capital is becoming more and more interesting to people. And the truth is, there's no cookie cutter approach. So there's a number of ways to tap into the venture capital industry. For me, I've always been a value driven, being in a capacity where I'm solving problems, more of a painkiller problems, things that we need to change versus a vitamin, which are nice to haves. I'm from Atlanta, Georgia, born and raised. I went to a HBCU, a historically Black college university called Hampton University. And as you mentioned, I started my career off in the private sector at Goldman Sachs and State Street Bank. It was important for me to one, gain a skill set, B, gain a strong social network as that's continued to increase over the years, and B, I would say gain some personal financial capital as well. And so that was important early on, but keeping in the back of my mind that the goal for me was never to be a managing director at a bullish bracket bank, but instead really focus on those 3 buckets. And then as I got deeper into my career, leverage mentors and really shaped my thinking around what are some social issues where I can lean in and kind of couple that deal making, investment, and just I would say just my love for just economics in general with social mission work. And so early on, it was education. I continued to play that one fit in, one fit out, where I sat on a number of nonprofit boards, which I continue to sit on today. And my first foray into venture capital, and I actually don't share this often, is I was a co-owner of a coffee shop in New York City. And we were essentially a WeWorks that meets, um, a coffee shop or a Starbucks. And we attracted a lot of social entrepreneurs, particularly social entrepreneurs, entrepreneurs who were building businesses, enterprises that were solving social environmental issues. And education continued to be a um, a a social issue that I lean in more the most and care deeply about, and started understanding that outside of teachers and chancellors and just a broader reform movement, I recognized there was this newer seat at the table called education entrepreneurs. And so I started really leaning in, learning about the industry, learning about the different venture capital firms that were in the space. Made a couple angel investments to kind of get my feet wet, get some skin in the game. And then I got introduced to Cory Booker during his special run for Senate. And it was at that point where it was during his special run for Senate. So I was doing some volunteer work, co-chair of his Innovation and Technology Committee. And then fast forward, his former deputy mayor tapped me to become the special assistant to the commissioner of education and governor at the time, focusing on digital learning and infrastructure. So they started really leaning in into the broader ed tech community, because the crux of that role was to uh, think, explore partnerships with ed tech companies at the state level between pre-K through 12, post-secondary into the workforce. And so that really got around what this world can, what my career can look like if I would combine my deal making, investing, my now growing expertise in the ed tech space, um, and and that's where it really all started. Working at the state level, being an appointed official, really got me a great experience with, I would call, the end user, like understanding how paying customers and the end users actually are leveraging technology to reimagining learning across the entire spectrum of education to employment. So that was great training. I think you don't find enough managers who get that type of experience. Maybe you can correlate that to operating experience, but that was very, very beneficial. And then I moved to DC, from Connecticut to DC, to start at Village Capital. So I'll pause there, but that was like my 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 foray into venture capital.
I love that because you talk about, nobody has a traditional path in, right? And you talk about going from the finance sector to focusing on public service at the Connecticut State Department of Education, and getting that insight into what 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 is really needed on the ground level, and then being able to take that knowledge to Village Capital, and see if you can fund those initiatives. So that's great. While you were at Village Capital, I know they have a unique model of investing. Can you share a little bit about the work you did there, and what makes their approach unique?
Yeah, I think in Village Capital today is an amazing both for and nonprofit, because they do have two arms, which I love. But Village Capital, I credit Village Capital really shaping my thinking in terms of the intentionality and earmarking our traveling dollars to under-resourced um, communities and ecosystems that often don't get the type of media attention and capital and mentorship that they deserve. And I've always said, if entrepreneurs are going to be the change makers of our country, then it has to include everybody, not just very few people that come from the same places, that go to five or so schools, or come from five or so schools. And so I truly believe that they originated or have led the conversation in terms of how we think about democratizing entrepreneurship. And I you know for me, when I joined, I was global head of our education, technology practice and investments. and running point on our strategy, our thesis and sourcing. And it was eye opening. On the one hand, I think I might've been 28, 20, 27 years old, and had a pretty big responsibility. But, again, it was one of those situations where a huge responsibility, but most important component of that time was to build a solid advisory board that offered domain expertise, that pushed our thinking, that introduced us to um, excellent entrepreneurs and even stakeholders and investors who will come alongside us and invest in us. Um, and and then after becoming global head of the our education practice, I ended up expanding my lens because I thought that was important. I did not want to solely be an investor that focused on one sector, especially as I thought about economic mobility and opportunity. It's other sectors, not just education. It's financial wellness and creating a system where the financial service industry works for everybody. So it's fintech, and then there's health. As we think about low wealth patients, another vertical, by the way, that's being highlighted a lot during the health pandemic. And so then that's where I became our U.S. economic opportunity lead.
That's great. And what in shifting to social investments at AT&T, what was that uh what what presented that opportunity? Why did you want to make that shift?
Yeah, AT&T was interesting. First, it was a great 2 years. I told my mother, I said, Mom, I will never go back into a private sector. It just doesn't make sense. I don't see myself working in a capacity that's exciting. And AT&T was an early supporter in Village Capital, and it was one of those partnerships where we just got really close. One cocktail led to a formal number of dinners, and I said no the first time, and then it took me a few more times to say, you know what, this can be a great opportunity, right? And I joined because I've always said there is a a missing opportunity for large corporations to proactively lean in a bit more as it relates to small businesses, not just a very specific sector, which I did focus on, but just the overarching theme, the role, the power of corporations can play in helping small businesses grow. As you think about the percentage of small businesses that come from quote unquote secondary markets, or just markets that are outside of your traditional tech hotbed like San Francisco, Boston, and New York, 82%, right? You think about Chipotle being in Colorado, you think about Target and General Mills being in Minneapolis, you think about Home Depot and Delta and the likes being in Atlanta. And of course, you think about AT&T being in Dallas. And so this was a large, iconic corporation who wanted to rethink how they deployed their philanthropic dollars, right? So this is not AT&T venture capital arm. This is AT&T Foundation, building out this social investment vehicle that gave us the ability to deploy capital into for-profit early stage companies, to run a accelerator program, an in-house accelerator program that was a 6-month program that also provided resources internally, right? And also we were able to provide non-diluted capital or capacity building for ESOs all across the country, not just in these tech hotbeds where most may find think the best entrepreneurs come from. And having those formal relationships with Ashoka, with Camelback Ventures, with Village Capital, it allowed us to have early access to these companies that allowed us to, in many cases, make seed early investments. And I think and they still do that today, by the way. And I think that's a great exemplar of an iconic company who's really, being very thoughtful with their philanthropic dollars. And it was an evergreen fund. So the model is that, if we the companies in which that perform well will go back into the foundation, and they'll continue to leverage that capital to make more investments into early stage education technology companies. In this case, I mean, my ultimate goal was to expand the lens of AT&T, thinking about other sectors and even more so being a generalist. But Warren Buffett says you stay within your competence, do that well first, and then you scale. I think the upside about working at a large corporation is that you're your own LP, right? I wasn't going out raising money. This was a $400 million vehicle that we were deploying capital out of, and that was more. I had more time on my hands, quite frank, in terms of focusing on companies and not focusing on where the capital is going to come from.
I get that when I have conversations with individuals in our training program on venture investing, we get into that conversation of when you go into corporate venture capital, how there's a positive to it, right? There's a there's more resources, right? So they're making investments, a little bit more strings attached to make that investment because you have to get buy-in, but sometimes not the same amount of you because you have more resources than a smaller fund. There's trade-offs there.
Right.
You can be at a place with where there's more red tape and more money, but you could have less red tape or less to invest. But there's always a trade-off, and for those that are interested in corporate VC versus VC at large. Want to shift to Zeal Capital Partners and your vision in shifting from focusing on education, and then more broadly to social investments, and then again now narrowing your focus on fintech and future of work, and inclusive investing. Can you share how I know looking at your website you've defined different areas. Can you share with the audience a little bit about how do you think about investing in fintech and future of work?
Yeah. So for us, it's this strategy, which we believe is our core differentiator, which we're coining inclusive investing. Inclusive investing, which we actually trademarked, believe it or not, it's a market back approach that allows us to find or source untapped opportunity that ultimately will also allow us to outperform the market, for our companies to outperform the market, but also for our fund to outperform. And the data is very clear as we think about our 5-prong approach to inclusive investing. The first is that we ourselves are diverse fund managers, right? And so as you think about the data today, it's very clear of the $70 trillion under management, 1.3 is managed by people of color and women. I think that's wrong, and that's everything that's wrong with the venture capital industry, and many of us are working tirelessly to change. But the truth is, when you are a diverse fund manager, when you're not diverse, it's a 32% chance that you're not going to, your fund performance will not be, you'll have a negative fund performance if your team is not diverse. Excuse me. But also we know when you're a diverse fund manager, you're 2-3x more likely to invest in founders that often do not receive investment. So for us, while we're not solely focusing on African American or Black and brown entrepreneurs, or solely women entrepreneurs like certain vehicles, for us, it's having a team that has a expansive lens of finding, sourcing, and making investments into these companies. Just to highlight my team a bit, I think that's very important. Just be kind of selfish here. I have an amazing team beginning with Andy Will, who recently came from Listen Ventures, an early stage fund that he led sourcing for their fintech vertical. Former JP Morgan, Chicago Booth School of Business, just an amazing, very similar trajectory as I did, starting in trading and then having this interest in the venture capital space. And then a close friend of mine, Jason Green, who recently joined us, former Obama appointee. He was the associate counsel, literally the right man to Eric Holder. He, over the past 7-8 years, built a profitable company called SkillSmart that he co-founded, and he's general counsel. It's an employment technology company that's for both education providers, employers, helping employers think thoughtfully about competency-based skills. It has a people analytics, predictive analytics platform to it, and so he's had he offers a domain expertise in the future of workspace. So he's our executive in residence, focusing on the future of work. Nicole West, she's amazing. She is former Legg Mason executive, Capital One executive, Freddie Mac, and she is very well known, especially in the Mid-Atlantic region, for the FinTech roundtables. It's a highly curated roundtable highlighting the up and coming early stage FinTech companies here on the East Coast, and so. Between the two of them, they offer deep operations and domain expertise, while Andy and I couple that with our investment experience, deal making experience, coupled with our domain experience, our domain expertise in fintech and future of work as well. And so that's our core team, and then we have our operating partners, Sergio. That we are a fund that's in the business, not just to write a check, but to offer, be a real value add. And so one of the strategies that work for me at Village Capital, for example, is that I develop in K-12, we call this wraparound services. Understanding that when you're a pre-seed to, or just an early stage company in general, there are other challenges you're battling, whether it's governance and culture and talent. There's your narrative, right? You think about really telling your story. There's your go-to-market strategy, thinking about customer discovery. There's product and technology, thinking about the technology and ensuring that it's user-friendly for the customer. And then there is your operations, right? And thinking about just the day-to-day operations. And so we've partnered with 5 domain experts within those areas. And so each of our portfolio companies, as we think about post-value creation, each of our portfolio companies will have access to those operating partners. And then couple that with our advisory board, who are thought leaders across the 2 verticals and impact investing space, who are not just on our website just for show. These are people who I know, I've gotten to know very, very well. I've co-invested. I have worked directly with some of them, and I credit them a lot of shaping my thinking around the two verticals, particularly as we think about the subsectors across the 2 verticals. So diverse fund man, as we think about going back to inclusive investing, I want to stay on par here. Diverse fund manager being one, diverse management teams. So as we think about diverse management teams, not just ethnicity and gender, although we are, again, 2x likely to invest in people of color and women versus your average venture capital fund. But we're also thinking about your skill set, your background. The more we get to know you, maybe your socioeconomic background. So this holistic approach as we think about a diverse management team, and that's actually potential or current. So it's not that we're going to say no if a company is not diverse. It's another important aspect of this. The good news is that that's a value add for us. So recognizing the value add for every company that may not check all the boxes of our inclusive investing strategy, but maybe that's how we add value to those companies. The third bucket is understanding very clearly where capital has gone over the past 10 years. 70% of investments go to three places: Silicon Valley, New York, and Boston, where the 47 other states are fighting over the remaining 25%, 20%, excuse me. And I think that's wrong. And then since 1995, we see a 50% reduction in capital being deployed outside of those ecosystems. And so for me and my broader team, as I mentioned, during my time at Village Capital at AT&T, we proactively formed deep relationships with entrepreneurial support organizations and early stage investors who come from the middle of the country, like Drive Capital out of Columbus, Ohio, for example. And the team, a lot of investor friends down in Atlanta and in Miami, recognizing that there are investable companies that deserve investment, and they should not feel that they have to move to these tech hotbeds in order to seek investments. And some may argue maybe for a few months. I mean, that's a good strategy, and then move back to your home where your dollars travel a lot faster. I mean, stretch a lot longer. But so that's an intentional. We're an outbound fund. We actually earmark our traveling dollars where we will actually go to those secondary markets and as we get into diligence. The second is our sector focus, which we talked about, and the third is our impact. Viewing every company with the potential of impact. And as we think about impact, it's in the fintech space. Fintech platforms and resources that support the un and underbanked. Financial services does not support most Americans in this country. As you think about as you think about the future of work, there's platforms out there directly supporting first generation college students and low wage workers. Platforms focusing on low income communities and school districts, and so that's important for us. And so we have a pledge. We'll require every company to sign a pledge to A, ensure that your team is diverse, and B, to encourage to scale these platforms into under-resourced low wealth communities and low wealth customers as well. So that's our inclusive investing strategy. All of you can go on our website to dig a little deeper how we think about the numbers, because it is a market-backed strategy. And the ultimate goal for us first is to outperform the market, and we believe taking this holistic approach allows us to do that. And so we're literally stacking the deck in terms of how we think about leveling the playing field across the country and ensuring more entrepreneurs get a fair swing at the plate.
I'm glad you went right into, to beat the market, right? And I think investing in this sector, we're all focused on making a difference in several ways, but some people may have the preconceived notion that this isn't a place to make great returns. Can you talk a little bit more specifically about it being a place to find great opportunities that yield outsized returns, and how do you see that unfolding in this space?
Yeah, I think there is power in, first, as you think about entrepreneurs who have worked in a capacity over the years, and they've seen this problem over and over again. As we think about credit access expansion, where taking a more holistic approach to thinking about FICO scores, for example, and on the future of work side, thinking about alternatives to higher education, like mommy and daddy. The cost of higher ed is not decreasing anytime soon. So mommy and daddy, grandma, mentor are beginning to broaden their lens and say, look, son, daughter, 2-year, 4-year. Let's also think about a boot camp or apprenticeships. And then on the employer side, employers are also considering other forms of education models that allows them to seek talent that will fill open roles. And so it's moving to a large focus on skills, and I firmly believe this. Now, I think the big schools will always have their brand, and I will not take that. I don't think that's going anywhere. But I do think we're going to see a shift into skill, like paying closer attention to skill, competency, versus versus your school. And people
Let's push into that too. Is like, how do you see the future of when you say the future of work? How do you see this changing? Because I mean, for most people, right? It's like there's some don't know, right? That it's like 40% of the U.S. has a higher ed degree, and then others can't afford it, and then most jobs are using a degree as a just a piece of paper or a filter, right, to get to that talent. And you said it's going to shift to skills. How are we going to see, like, what are other trends we're going to see in the workforce and in this skill? Like, how are we going to see this the skill focus manifest?
Yeah. So I think we're going to see a couple things, right? Well, I think looking at platforms that pay attention to maybe soft skills is an area that we don't touch on as much. Paying attention to, and we're seeing that today, the shift in working from home, right? And how that impacts companies' culture and productivity. And so there's companies that are, thinking about, that leveraging, whether it's feedback or just being more transparent as companies shift this culture from working in the office to working from home. And so again, I really think that, and then there is the reskilling, the training, skill development programs that your 35 to 50 age worker that's not even not ready to retire at no time soon, but their ability to keep up with the changing workforce and the skill sets that are needed to stay relative and competitive in the workplace. There's a growing number of companies that hopefully will allow that continuous learning. And so yeah, I think that is going to be important. I think as companies move or have the choice of most of their workforce to work from home, I think it yields more now a larger allocation of dollars that allow people in their company to get additional education around skills that they probably don't have at the moment. That if they do want to seek to get what do you call it? Seek to get promoted or transition into a new space, there are certain skills that they will need. And so those are the trends I'm seeing around culture, around access to upskilling and reskilling, alternatives to afford those types of programs, right? And so there's the ISA model and income share agreement that I've become pretty big on, that provides essentially gives it's you go in not having to pay a dime, but you pay a percentage of your salary, assuming that you get a job after you finish that course. And so there's companies I can't name, which is why I'm bouncing around the types of companies that we're actually interested in investing in. But hopefully that gives you a bit of a color on the future work side.
No, that's great. The skill building, especially I'll ask a question specific to this time with COVID happening and more distance work. What are trends that you think will stay, and what are versus ones that maybe we'll just go back to the office? Do you think we're going to just go back to the office, or how do you see this unfolding and impacting work going forward?
I think it's what industry you're in, right? I definitely don't believe that. I think it's going to be more. It's going to be more optional for workers to go in the office versus versus stay home. I think I'm sure a lot of companies are reevaluating their productivity, and productivity is even better. Then you're going to see a lot of workers to stay home, and then I think it impacts a lot of markets like real estate, and allocation dollars go elsewhere as dollars free up, because companies are not paying for leasing space, or at least space in the building. But then there are essential workers that are going to continue to go back to work. There's and so even those that do choose to go back to work, they don't need, not go back to work, but go to back to work in the office, and they actually don't need to. I think you're going to see about a fourth or less than a half of these buildings being occupied in that particular workspace. So that's one. How we think about productivity and those that choose to go back into the office or not. That's one. I really think the retail market is going to shift, and I think the e-commerce people are going to have already adapted, more spending and shopping even before COVID, but it's even increased during COVID. The e-commerce business is going to continue to excel, and retails obviously have already suffered, and many have unfortunately closed doors. And so how do we, and then that's additional real estate. So in across cities. So what do we do with additional real estate in the across the market? And so investors are going to have to be very, very thoughtful as they think about their long-term investment, and really understanding consumer behaviors, especially as we think about, is the economy opening back up, or do I believe that we're going to hit a second wave, which some may argue is going to be worse than the first wave, which I honestly believe, just personally. And so it's a chicken and the egg, right? This is a health pandemic that none of us has ever experienced, and so we're literally flying this thing as we build it, and we're trying to skate where the puck may go, but that's even difficult to do. But yeah, those are my just initial thoughts on and how COVID has impacted the workforce.
Great. Thanks for sharing that. And on the topic of current events that are happening and highlighting diversity and the Black community, what more can we do in the startup space and the venture space to elevate the Black community and communities of color?
I think what we can do is what we have been doing, and you're finding obviously more people jumping in, which nothing's wrong with that. We need all the support and the allies, and of course the capital that we need to get to ensure that investable businesses, investable Black-owned businesses are getting invested in, right? And we notice a couple of things that happened over the past couple of weeks, right? It's the Andreessen announcement. There was the SoftBank announcement. Great. We know the numbers, right? 1% of 1% of venture capital dollars have gone to Black and brown entrepreneurs, and I believe is it still 1% of VCs that have at least one Black partner at their fund. I'm unsure. I'm sure it really hasn't changed, and so that's a chilling statistic, because the truth is, while those two shops brand recognition is quite clear, I personally think we're better off. You're better off deploying that capital to diverse fund managers that actually have a closer relationship and a deeper understanding of the consumer base, and just knowing where to find these entrepreneurs, these Black and brown entrepreneurs. And so I haven't heard of initiatives that are laser focus or see an upside and not only deploying capital directly into entrepreneurs, but maximizing their impact by way of leveraging diverse fund managers who they should believe have a larger lens and access to these Black and brown entrepreneurs. And I think that's missing. I think PayPal recently came out with a $500 million commitment towards both diverse managers and entrepreneurs. So kudos to PayPal. I'm actually 100% sure they recently came out with that. But I'm hopeful. I've always as it relates to this particular topic, I remain hopeful. I believe, and this is what we're doing at Zeal, and you see this across my peers and even organizations like HBCU VC, for example, is ensuring that we're training the next generation of diverse investors. Right, change is not going to happen overnight, and so how do we, lean in and mentor the next generation of diverse fund managers? And so I'm really excited about that. And I think, for me, as much as you look at the broader landscape and you can get overwhelmed like a dirty room, you don't know where to start. You can do but so much. And my responsibility, I believe, is to lean in as a mentor, leverage my social capital and be part of, support my peers as they too elevate the broader VC ecosystem and elevate and enlighten white VCs as well. And they also need to have the willingness to join us. And again, my whole thing also, Sergio, is that how long is this going to there's this momentum over the past couple of weeks, and so let's say a year ago today, is that momentum going to feel the same? I question that. I don't think it will. But we shouldn't think like that, but I'm a practical thinker. But again, I know I have a responsibility to lean in and be a voice and write and not be silent, because, capital and the sustainability of these companies is an economic driver across our entire country, which yields creating more jobs. So there's that's incredibly important to think about the broader economy as well.
That's great. I think that's great insight into the movement, right? That'll take place over time, but the ways in which it can really help our economy. So I'm gonna pause there and say thank you, Nasir, for joining us. Nasir Qadree, who's managing partner at Zeal Capital Partners. Thanks again. And again, for everyone watching, this is Rebel One Live. Please join us on Tuesdays and Thursday nights at 7 p.m. Eastern to hear from more amazing investors and founders. So thanks again, Nasir.
Sergio, thank you so much. And if anyone wants to reach out to me, my email address is nasir@zealvc.co. That's nasir@zealvc.co. And it's my first and last name on all social platforms, Instagram, Twitter, you name it.
Blow it up. Also, if you want to find him, the link is also in the live stream notes. So thanks, everyone. And check out Zeal Capital Partners for the founders. And thanks for joining us.